Welcome back to the deep dive. Today, we're tackling something huge, maybe even a bit wild.
Definitely feels that way sometimes. We're diving into AI and blockchain colliding, specifically these AI crypto tokens.
Yeah, it's a space filled with massive ambition, but also incredible volatility.
Absolutely. And the core question we want to unpack for you today is pretty fundamental.
Which is?
Are these tokens actually building something useful, something genuinely decentralized? Or is it mostly hype? Maybe even an illusion of decentralization.
An illusion fueled by speculation, because the market reaction has been, well, insane at times.
Oh, completely. Remember late 2022, right after ChatGPT dropped?
How could we forget?
Those AI-related crypto assets just exploded. We saw, peak gains over 41%.
In just 2 weeks. That tells you investors immediately got the connection, the story.
They got the theme, for sure.
Yeah.
But a good theme doesn't automatically mean good tech or, sustainable value.
Right. So we need to look under the hood, past the hype, past the price charts.
Exactly. What's the actual vision? And crucially, what are the limitations?
Let's get into it. Okay, first up. Decentralized AI, or DEAI. Why even bother? Why try to decentralize AI?
Well, the driving force is really about control.
Control of what?
Of the AI itself. Right now, think about who owns the big models, the data, the computing power.
It's the giants. Google, Amazon AWS, OpenAI.
Precisely. Centralized corporations. DEAI wants to shift that power
Towards
open ecosystems,
Yeah.
run by communities, not companies, where users have more say, more ownership over their data, over the AI's output. It's about self-sovereignty.
So break down the AI monopoly piece by piece, and we've seen projects targeting different parts of that stack, right?
Yeah, definitely. From the bare metal up to the actual intelligence.
So who are some of the key players trying to do this? Let's start with maybe compute power.
Okay, compute. That's fundamental for training these big models. Here, Render, RNDR is a big name.
Their thing is pooling GPU power, right? From users all over the world.
Exactly. They create a decentralized network of GPUs.
Yeah.
The idea is to make that expensive hardware needed for high-end graphics and now AI more accessible.
Okay, so that covers the hardware layer. What about the AI models themselves, the intelligence part?
That leads us to projects like Bitensor, TAO.
TAO's approach is really interesting.
It is. They're building a peer-to-peer market for AI models to collaborate, essentially, and compete.
Using something called proof of intelligence.
Yeah. It's not like Bitcoin's proof of work. Here, you get rewarded, your model gets validated based on how good it is, how well it performs against others in the network.
So it's like an economic incentive tied directly to making smarter AI.
Pretty much. A kind of competitive ecosystem for intelligence.
Okay, and then things got even more serious with consolidation, that big merger in 2024.
Ah, yes. The Artificial Superintelligence Alliance, or ASI.
Which brought together 3 major projects, focused more on the data and the sort of AI economy layer.
All right. That was Fetch.ai, FET, SingularityNET, AGX, and Ocean Protocol, Ocean. A major move to try and build a more complete, decentralized AI pipeline.
So Fetch.ai, what was their specific angle?
Autonomous agents. AI agents that can do things in the real world, like booking flights, managing supply chains, that kind of coordination.
Okay. And SingularityNET, AGIX.
Think of them as a decentralized marketplace for AI services, like an open app store, but for AI APIs. Developers can offer their models directly.
Without a central gatekeeper. And the third one, Ocean Protocol. They tackled the data problem, right?
Yeah, and data is often the most sensitive part. Ocean enables secure data sharing using data tokens.
And they pioneered that compute to data concept.
Crucial concept. It lets you run AI models on data without actually seeing or moving the raw data itself. So the data owner stays in control, but people can still innovate with it. Very clever.
So the overall ambition here is it's huge. It's like building a parallel AI universe, open source, community driven.
A massive vision, no doubt about it. But, and it's a big but, that vision runs smack into some pretty hard technical realities right now.
Okay, the reality check. Why aren't these DEAI projects dominating the centralized guys yet?
There are several structural challenges. But maybe the biggest one is the heavy reliance on off-chain computation.
Meaning the actual hard work, the heavy lifting of AI.
Yeah, training the models, running them at scale. That mostly still happens outside the blockchain. Current blockchains just aren't built for that kind of intense workload. They're too slow, can't handle the data volume.
So the blockchain part is more like, what? A payment layer, coordination.
Often, yes. It handles payments, maybe governance, tracking who owns what, but the core AI engine, that's running somewhere else, often on traditional servers.
Which kind of brings up a trust issue, doesn't it, if the computation isn't on the chain?
Exactly. That's the trust problem. You have to trust that external party, whoever's running the AI off-chain, is doing it correctly and honestly. It kind of undermines the whole trustless promise of blockchain.
Okay. And practically speaking, using public blockchains also leads to performance issues, right? Scalability.
Oh, massively.
Yeah.
Think about speed. Centralized platforms, AWS, Google AI, they can handle maybe thousands of queries per second.
Right, for real-time stuff.
Yeah. Compare that to a typical public blockchain.
Yeah.
Maybe you get 50 transactions per second. Maybe 100 on a good day.
That's a huge gap.
It makes it really difficult, almost impossible right now for these decentralized networks to power demanding real-time AI applications that businesses need.
Then there's the verification dilemma. In this open market, how do I actually know the AI I paid for is any good, or even did the work correctly?
That's incredibly tricky, because truly verifying complex AI output often means, well, you'd have to run the whole computation again yourself.
Which defeats the purpose of paying someone else to do it.
Right. It wipes out the efficiency game. If verification costs as much as the original task, the model doesn't quite work economically.
I know Numerai tried to tackle this with, like, staking.
Yeah, Numerai's approach is interesting. Data scientists stake their NMR tokens on their predictions, financial forecasts.
If they're right, they earn more. If they're wrong.
Their stake gets penalized or burnt. So there's a direct financial incentive to be accurate.
But does that totally solve it?
It helps align incentives, but it's not foolproof. You still have risks, like what if a few big players collude? Concentration risk again.
And finally, just getting people to use these platforms, the ecosystem bootstrapping challenge.
It's a big one. You're competing against free, easy-to-use platforms like Hugging Face or Kaggle that everyone already knows.
Whereas the crypto stuff often involves
Managing wallets, buying specific tokens, dealing with complex interfaces. It's just higher barrier to entry right now. Until that user experience gets way simpler, adoption's going to be an uphill battle.
Okay, let's switch gears from the tech limits to the financial side, because the speculation in this AI token space can be absolutely wild.
Yeah, and the COAI token, ChainOpera AI, is a perfect, if maybe painful, example.
Painful.
It shows how that decentralization dream can get totally warped by extreme market dynamics and concentration.
So COAI claimed to be building some decentralized AI platform.
Right. Custom consensus, the usual promises.
Yeah.
But the price action, it just screamed manipulation.
Talk about volatile. Remind us of that crazy run-up in late 2025.
It was staggering. The token went up 228 times in just 17 days.
Wow. From what, like 20 cents?
From $0.21 to a peak just shy of $49, October 12th, 2025. And then, predictably,
It crashed.
crashed hard, over 80% down. That kind of move is a massive red flag, regardless of the tech claims.
And the valuation at that peak, it was completely detached from any sense of reality.
Totally. Its fully diluted valuation, the FDV, hit $15.3 billion.
Okay, put that number in context for us.
Well, analysts pointed out that $15.3 billion was way more than the entire market cap of that big ASI alliance we talked about earlier, Fetch, Ocean, SingularityNET combined.
And their combined market cap was?
Around $9.2 billion at the time. So COAI, this single project, was valued far higher than that major consolidated group.
Makes no sense fundamentally. What did analysts think was a reasonable price?
Much, much lower. Somewhere in the range of maybe $2.50 to $4.50 per token. Not almost $50.
So what fueled that insane price pump? Not real adoption, clearly.
No, it was extreme concentration. This is where that illusion of decentralization really hits home.
How concentrated are we talking?
The numbers are pretty stark. Source analysis showed the top 10 wallets controlled over 96% of all COAI tokens.
96%. In just 10 wallets.
Yep. And the top 100 wallets held 99.74%. It's not decentralized. That's a handful of players controlling the entire game.
And their control allowed them to manipulate the market.
It seems very likely. There was evidence of coordinated activity. Analytics found 60 wallets making thousands of automated trades, all looking very similar during that price surge.
Smells like a coordinated pump.
Strongly suggests it, yeah. Pumping the price, drawing in retail excitement, and then likely selling into that demand.
And the risk isn't even over for COAI holders, is it? Because most tokens aren't even circulating yet.
That's the ticking time bomb. Only about 19.6% of the supply is currently out there.
Meaning
The other 80% held by the team, early backers, etc., is scheduled to unlock to become sellable after 2026.
That's a massive potential wave of selling pressure hanging over the market.
Huge future sell-off risk. Could easily push the price way down again. It's a cautionary tale about looking beyond the hype and checking the actual token distribution.
Okay, so CAA highlights the speculative dangers. But it's not all bad news. The industry is working on solving those core technical problems we discussed earlier.
Right, the off-chain computation, the verification issues.
Exactly. And there are some really exciting technical innovations emerging that could genuinely make DEAI viable and maybe even superior to centralized options in some ways.
So how do you fix that fundamental trust problem with off-chain execution? How do you verify the work was done right without redoing it? The big hope here lies in verifiable computation. Specifically, using zero-knowledge proofs for machine learning, or ZKML.
Zero-knowledge proofs. We hear a lot about ZK tech. How does it apply to AI?
Think of it like this. The AI provider runs the model off-chain, gets the result, but they also generate a special cryptographic proof.
A proof of what?
A proof that guarantees the result was generated correctly by the specific AI model they claim to use, without revealing the model itself or the private data used.
Yeah, so you get mathematical certainty without sacrificing privacy or intellectual property.
Precisely. It replaces trusting the provider with trusting the math. It directly tackles that core verification problem.
Okay, that sounds like a game changer. What's the catch? Why isn't everyone using ZKML already if it's so powerful?
The catch right now is performance and cost. Generating these ZK proofs is still very computationally heavy.
So it adds delay and expense.
Yeah, it adds significant overhead currently. Makes it less practical for, say, high-speed, real-time AI tasks today. But research is moving fast to make it more efficient. It's a huge area of focus.
Okay, what else? How about getting reliable AI results directly usable on the blockchain, maybe in smart contracts?
For that, look towards AI oracles. Think projects like Chainlink, adapting their model.
How would an AI oracle work?
The idea is usually quorum-based. Multiple independent oracle nodes all run the same AI task off-chain.
Okay.
They only report the result back to the blockchain to the smart contract once a majority of them agree on the answer.
Ah, so you get verification through redundancy, safety in numbers.
Exactly. It ensures the AI output is robust and trustworthy enough to trigger actions in decentralized applications.
Makes sense. And what about that data sharing problem? Getting access to sensitive data without compromising privacy.
That's where collaborative training comes in, often using techniques like federated learning, but enabled and coordinated by the blockchain.
Federated learning. That's where the model trains locally on devices.
Right. Participants train a shared AI model using their own private data, but only the model updates are shared, not the raw data itself.
And the blockchain helps coordinate this.
Yes, it can manage the process, verify the updates, and automatically handle rewards for contributing good updates, all while preserving data privacy. Think healthcare, finance areas with really sensitive data.
Okay, one last piece, infrastructure. If we have AI agents buying and selling services autonomously, how do they pay each other easily and cheaply?
This is where something like the Buy 402 protocol developed by Coinbase is really interesting.
Buy 402, that sounds technical.
It uses a standard web thing, the HTTP 402 payment required status code. It's null code, rarely used.
Why bring back an obscure HTTP code for AI?
Because it allows you to embed payment instructions directly into the web request itself. It's quite elegant, actually.
How does that work for an AI agent?
An AI agent tries to access an API, gets the 402 error back. But that error message contains the exact instructions. Pay this tiny amount of this stablecoin to this address.
And the agent can just pay it automatically?
Yes. Programmatically, instantly, maybe using stablecoins for super low fees. It enables seamless machine-to-machine micropayments without needing complex setups. It's built for an economy run by agents. Hashtag tag JDO outro.
Okay, so wrapping this up, it feels like we've journeyed through two very different landscapes today.
Definitely. On one side, you have this incredible, almost utopian vision of decentralized AI, user control, privacy, open innovation.
And on the other, the harsh reality of current tech limits, performance gaps, and as we saw with COAI, just rampant speculation and concentration risks.
Yeah, it's a field in flux. You see maturation, like the ASI alliance consolidating. That's a sign of stabilization.
But you also see the COAI craziness, reminding us that the speculative froth is still very much there.
But those innovations we just discussed, ZKML, AI oracles, collaborative training, new payment rails like Buy 402, they show a clear path forward. The tech is actively tackling the core problems.
Which brings us to the final thought, something for you, our listeners, to chew on.
Go for it.
We spend a lot of time criticizing centralized AI for its power, its potential for bias, for misuse. But let's flip that. If DEAI succeeds, if we get truly decentralized systems without central authorities, how do these open communities govern themselves?
Meaning, how do they filter out harmful AI models or enforce ethical guidelines?
Exactly. How do you ensure safety and fairness at scale in a system designed to be trustless and permissionless? That challenge, balancing decentralization with necessary ethical guardrails, might be the biggest one of all.
Governance without a governor. It's maybe even harder than the technical scaling problems.
A profound challenge indeed. We'll definitely be watching how it unfolds. Thanks for diving deep with us today.